Hooty hoo, all my stock market gamblers. Welcome today. It's Tuesday. What do we got going on today? Well, the markets are pretty flat. They're looking for direction. Now, we've had that pullback. The NASDAQ came down almost 20%, but it's already recovered about 7% of that. Now, here's the interesting thing. Okay, so we dropped below the 200-day moving average, but we have bounced back up to the 200-day moving average. Okay, so the 200-day moving average is now resistance on the NASDAQ. Now, the S&P, it's gotten above the 200-day moving average. Will it hold? That's the million-dollar question. So what direction is the market headed in? Well, I like to look at things like the VIX. All right, so the VIX is telling me yesterday the VIX came down by over 10%. All right, so that's telling me in the next 2 days, either today or tomorrow, the VIX will have a move in the opposite direction. Okay, so what that means to me is that the markets are going to have a little pullback here, a little pullback. Okay, now we may go higher. We're in the middle of this counter trend. This counter trend has gone up 7% off of the lows already, and we may go higher from here. We may get through the 200-day moving average on the NASDAQ. We may get up to, I don't think we're going to hit new highs. It's possible, but I don't think so. I think we're going to have a lower high, and then I think we're going to come back down again. You see, the Federal Reserve is what's going to cause this. Now, they're saying they're going to raise interest rates. It's all talk. They're not going to raise interest rates. That's a secret between me and you. They're really not going to do it. Sure, they may get one or two of them out the door, but as soon as that happens, everything's going to start coming in. Okay, the market's going to start pulling back. Look at, we've had what's known as the January effect, and I talked about that back in December. How January goes, the market goes. And I thought January was going to be a down month, and yes, January indeed was a down month. Not just any down month, it was the worst down month since the crash back in 2020 caused by the COVID, caused by the pandemic. So this has been the worst month since then. Okay, so we've had a really bad January, and now today's the first trading day of February, and we're looking for that market direction. Now this counter rally, it may have a little ways to go. I actually think the NASDAQ is going to pull back down a little bit from here. We'll see. I do think we'll get a little rally up, and then we'll go farther down. That's my opinion. Okay, just my opinion. I'm a gambler, you know that. Stock market gambler. You do what you want, but do your own research. What I want to talk a little bit today about is, well, I just want to talk about the American dream of buying a house, of owning a house. I'm a real estate broker in full disclosures, and I have still several people that are trying to buy a house. They are out there looking. They look at houses, but they can't afford what they want, so they have to settle. They have to settle for maybe a small condo instead of a single family home. But they have to settle. And when they go to get loans now, they're realizing that their payment doesn't go as far. You see, interest rates are starting to move up on mortgages. They're above 3.5%. They used to be below 3%. Now they're above 3.5% and headed into the 4 direction. Okay, so this means they can buy less house, but yet there's still a lot of buyers out there. I don't have many sellers yet. I do keep saying the sellers are coming, and I do believe they're coming. I do believe more foreclosures are coming. I do believe that the eviction moratorium will end. Now, can somebody explain this one to me? Somebody explain this. Now, in LA, Los Angeles, California is probably one of the most messed up states there is. Maybe New York gives it a little run for the money, but California is really messed up. Look, if you live in LA right now, okay, you do not have to pay your rent until June of 2023, not June of 2022, a year and a half from now. Now, how does this happen? When does the emergency end? Is the pandemic just going to go on forever? Maybe it will. I mean, according to Newsom, it's going to go on till June of 2023, and you don't have to pay your rent. Now, if you're a landlord down in Los Angeles, you hate this. You hate Governor Newsom. It's terrible. Somebody explain to me why this is happening. Now, here's the thing. You see, I always think, well, if you're a homeless guy, go rent a place in Los Angeles. You don't need to pay your rent. But here's what they're doing now for the new people coming in. They have an addendum to the lease. The addendum says that, well, if you agree, you can be evicted for non-payment of rent, even though the eviction moratorium is still in place until June of 2023. Now, something tells me this is not going to hold up in court, but maybe the tenant doesn't know that, so the landlord uses this addendum to the lease agreement saying that he can evict you anyways. Very fascinating, very fascinating. But what we got here is the American dream of owning a home, maybe becoming a landlord and maybe having your tenant not pay your rent. Maybe that's the American dream. But this American dream, when my parents were buying a house, houses cost about $15,000. And that was out here in California. $15,000. Do you know that same house today? It's roughly about $2 million. All right, so let's think about this. What was property taxes back then on a $15,000 house? Well, you'd have to come up with $150. Now, that cover you for the year. For the year, that would cover you. Now, let's say you buy that same house today and you pay $2 million. $2 million. What's your property tax on that? Well, in California, we're about 1.2%, let's call it. So you're about $24,000 a year or $2,000 a month. $2,000 a month just in property tax. That's crazy. That's not a dream. That's a nightmare. Look, people want to buy these houses, and I still say we're going to drop by 50%. People say I'm crazy, Mike. Even in the Great Depression, we only dropped 26%. Well, here's the thing. In the Great Depression, houses weren't levered out like they are today. They didn't have this 5% down and the bank covers 95%. No, you had to put down 50% back then. You had to come up with half the money and maybe get a loan for half the money. That's why there was never the big drop. Now, in the financial crisis, we only dropped 34%. 34% was a healthy drop, though. But we only dropped 34%. So why do I think we're going to drop 50%? Well, a very simple reason. The bubble is bigger. The bubble has gotten a lot bigger, right? And interest rates are not going down. Interest rates are going up. So here's the thing. Okay, people in the past, they've been using their house as an ATM, right? If they need money, Okay, well, we got to, pay for our kids' schools or something. We go take the loan out on the house. And we had equity in it. And the equity, we'd take it out and we'd refinance the houses. Refinancing was big also because interest rates were going down. So every time you refinance, your payments down. Well, you can't do that when payments are going up. When interest rates are going up, you refinance, you're going to have a higher payment. It doesn't work. It's not the free money that it's been for the last 10, 12 years. It's just been nothing but free money. Look at that. ATMs, they're gone for your house. All right, so here's the thing. Mortgage applications are down about 50%. 50%. That's a big drop in mortgage applications. Now, a lot of that is refi, but a lot of it is there's just not that much activity going on in the real estate market right now. It's kind of the calm before the storm. Now, once prices start to go down, you get this thing called the fear of getting out. It's not the fear of missing out. And I got buyers, and they're afraid that houses are going to double from here. I look at them like they're crazy. Why do you want to get in so fast? Just sit back and relax. It's all going to be okay. Prices are going to come down. You're going to be able to afford it, but it's going to take some time. Look at houses. This takes, 6 months, a year and a half, 2 years. It takes time to play out. It's not like the stock market. Stock market, we can wake up tomorrow and it can just crash. It can just crash really fast. But look at when the houses crash, the American dream, it kind of turns into a nightmare, right? And as interest rates go up, the houses are going to go down. Now, here's the other thing. thing. The Federal Reserve, they're going to stop buying these mortgages. They say they're going to stop buying mortgage-backed securities. What's that going to do? What's going to put more pressure on interest rates to go up even higher? Now, what if they sell the mortgages they have? What if they sell those into the marketplace? It's going to dry up the mortgage money. Mortgage money is going to be very tight. Maybe we get up to past 4%, past 5%, past 6%. Wow, maybe we get back to normal, like 7 or 8%. Oh my goodness, what will houses do? I'm telling you, 50% there's going to be a half off sale. This is just my opinion. Although I am a licensed real estate broker, it's still my opinion. I'm supposed to be saying, hey, it's a great time to buy, great time to buy. That's what I'm supposed to tell my buyers. I laugh at my buyers. Maybe that's why they haven't bought yet. I go, look at, you better find a place you want to live in for 20 years. 20 years, because it may take that long for the price to get back to the price that you buy it at today. You go buy a $2 million house today and it drops down to $1 million. It's going to take 20 years plus to get back to $2 million. That's correct. Now, if you're thinking of getting out, yes, I do believe it's a good time to get out. I do believe that. Okay, this is just my opinion. Once again, I am a real estate mortgage broker. Now, back to the markets. Okay, so the stock market kind of flat here, but it's had a 7% bounce. And that bounce was, well, some people would say it's a dead cat bounce. That's what the bears would say, a dead cat bounce. We're going lower. Now the bulls, they say we're going to those new record highs. Well, they can actually both be right. They can. We could go lower first, then hit the new record high, or we could hit the new record high, then go lower. Look, I'm a trader. I trade the market, up and down both ways. I'm not a perma bull. I'm not a perma bear. You got to play the direction both ways, and there's signals out there that are telling you what to do. Now, right now, we got a signal at the NASDAQ at the 200-day resistance. It gets through there. It's off to the races. I don't think we're going to new highs, so I don't. We'll see if we get through the 200-day. It's going to be interesting. I'm Tall Mike. If you like this stuff, thumbs up. If you really like it, hit the subscribe button. Get out there. Have a great Tuesday, everybody. We'll talk again later in the week. Bye-bye now.